Beams VC. And now, to take the session ahead, I'd like to give it over to Shubham, and Shubham will tell us all about the next session and also invite the speaker. Over to you, Shubham.
Thank you so much, Yoma, for the introduction. Good afternoon, ladies and gentlemen, and very warm welcome to the Masterclass Role of Fintech in Upholding Sustainable Finance. Environmental, social, and corporate governance, or ESG. These are the trendiest words in finance. Supporters say that being ethical and being profitable need not be mutually exclusive, benefiting stakeholders, society, and the planet. But critics argue that these products are not that different from other investments and complain that it can be hard to measure whether a company is actually doing the right thing. So, is ESG just good branding? In the recent times, the impact of our day-to-day lives on the environment has been the center of attention. And that is affecting how investors allocate their money. There is this increasing understanding in society that we need to care about the climate, about social condition of employees, and governance activities, which has shifted the focus of the investment management industry. Fintechs, on the other hand, have been closely connected with sustainability by offering easy access to financial services. Fintechs have directly contributed towards the social, economic, and environmental sustainability in various regions of the world by supporting small and big businesses that are closely tied to the regional and international context. While unbridled technologies expansions and unchecked industrial development may have proved to be unsustainable in the long run, Fintechs, on the other hand, offer a powerful foundation for sustainable finance towards urgent social, economic, and environmental goals. Without taking much of your time, I'd like to call upon stage Ms. Smitha, who has an extensive experience in ESG and climate strategy. Ms. Smitha represents here auctusESG, which is a global expert advisory firm facilitating global sustainable development and climate change transition. Ms. Smitha's expertise lies in product structuring, financial analysis, and research across financial services, clean energy, and livelihood sectors. With a big round of applause, everyone, please welcome on stage Ms. Smitha.
Thank you very much, Shubham, for that introduction. And good afternoon, everybody. I know it's in the middle of lunch, so thanks, everybody, for joining. So before we jump into today's topic, of sustainable finance and fintechs, let me take a minute to introduce what auctusESG does. So Auctus is a global advisory firm in the areas of sustainable finance, ESG, and climate strategy. And we work across markets in Asia, Africa, and Latin America. And we look at both the opportunities as well as the risk side of sustainable finance and climate. So when I say opportunities, it is designing innovative financial structures and mechanisms, sustainable finance frameworks for bond issuances and such like. And on the risks, we look at climate risks, ESG risks, how they can be integrated into business models, climate-related reporting, and things like that. We also do a lot of, thought leadership, research reports, articles kind of work. And one of the research activities we did was for Springer. And it was around, the role of financial institutions in using financial technologies for, achieving sustainable development goals. And what was interesting to note is, the similarity between sustainability and digitalization, so to say. So both have grown at an increasing pace. Everybody seems to be talking about sustainability and digitalization. So it only makes sense, therefore, to kind of use digital solutions to achieve sustainable development goals, I would say. So the concept of sustainability has, gotten increasing attention both at national, international levels. And this is more so because climate change has become a very real thing. So in the next 50 years, it is estimated that there will be significant economic loss because of climate change. India alone is estimated to, face about $35 trillion loss if climate change is not, looked at with a keen eye. And financial resources are central to this transition. And therefore, sustainable finance needs to be done, looked at more creatively, more innovatively, and also make it more, risk-proof, so to say, or at least less riskier than what it is today. So, before we, get into the fintech aspect, I thought I'll just spend a couple of slides on sustainable finance. So, as you can see on the slide, there are various terminologies associated with sustainable finance. So, different definitions by different organizations. So, you can see that the European Union, so Europe is where most of the action is when it comes to sustainable finance, has defined it as using ESG in investment decision making. Within sustainable finance, there is green finance, and within that, there's climate finance. So even for these terms, it's not uniform. There are different definitions, methodologies, terminologies, and mostly, because there's no universal definition, organizations have started using this according to their motivations. So there is a proliferation of heterogeneous terminologies for the term. But despite this confusion and chaos because of different terminologies, which could lead to greenwashing, you can see that there has been a tremendous growth in sustainable finance flows. So, sustainable debt issuances crossed the $1 trillion mark in 2021. Green issuances, which is basically green bond, green debt, these kind of things, that had crossed about $500 billion. And the non-green part, which is more to do with social aspects, was about $600 billion. Recently, because of the war in Ukraine, most of the finance has been directed towards that from developed nations. But nevertheless, Q2 has been better than Q1, about $400 billion in H1 of 2022 towards sustainability. So the underlying fact is, because there is so much of flow, sustainable capital needs to be made more secure going forward. Now, while sustainable issuances are increasing, especially over the past 2 years, more so with COVID coming into play, this is far from sufficient, from addressing what is actually needed. So IMF's World Economic Outlook says that over 50% of population is within these LICs and LMICs, but actually only about 15% of investments go into these countries. And there is tremendous need which is needed, tremendous need which is there in these countries to achieve the SDGs. Energy transition alone is over $2 trillion, that's what is estimated. And when we talk of climate finance, for climate resilience, climate adaptation, so to say, it's very, very fractional, to what is required. So CPI had put out a report, and it says that $630 billion is what is actually there, as against close to $4 trillion. So you see, there is a huge gap, and this story is not very different in India also. About 1/4 of, or less than that, is what is needed is actually there in the markets. And another problem which emerging markets like India face is the high transaction cost. So essentially, existing financing mechanisms which are there are not sufficient, even in terms of scale, as well as in terms of the quality of investments to meet the sustainable development goals. So what are the challenges which are there, which are being faced because of, to scale sustainable finance? Firstly, like I told you, there are multiple terminologies. But one step ahead, it's not just the multiple definitions, but also multiple methods of, defining these things, multiple processes which are involved. And because of this, countries have brought about something called taxonomies, sustainable finance taxonomy. So European Union has it, China has it, the ASEAN region has it. But because the world is so interconnected these days, and finance flows between the regions is so dependent on what each other's economies are defining, there has to be some level of harmonization. The world is moving towards that, but we are not yet there. So that is a big challenge for especially global capital flows towards sustainable finance. Next is, the demand for granular, new and updated data. So data is a huge challenge when it comes to sustainable finance. So lack of reliability, lack of comparability between the data, especially climate-related data, because it's a very new topic. Across the world, people are learning about it. Some regions are more advanced, but nevertheless, there is a learning process. And therefore, data management is also going to get more cumbersome after, so many climate-related disclosures, sustainable finance disclosures are becoming mandatory. So this is a huge challenge which sustainable finance is facing. The data-related challenges are exacerbated, I would say, by people not really being able to connect sustainability with the bottom line. So making sustainability a business case is not something which is widely accepted across economy. So yesterday I had attended the Swedish ambassador's session, and Sweden is ahead of most countries for sustainability. And there were some very interesting statistics which was there, which mentioned that Sweden looks at sustainability not because regulations ask them to, or not because investors want to invest, but because they want to make it a business case, because they want to make their businesses competitive. And that, I think, is a very interesting fact to pick off from such markets where sustainability is way ahead of curve. And also in countries like India, where transaction costs are very high, especially for small ticket loans. So the administrative, certification, reporting, verification, which comes with such kind of issuances, is quite high. Also, because the transaction costs are high, sustainable finance issuances like green bonds, etc., are restricted largely to the larger players, like some of the bigger corporates in the country, and not so much the smaller players. So how to make it inclusive is to bring down transaction costs, to make it more transparent, and these things like this. So this brings me to the next slide on digital sustainability, which largely can be used to address most of the challenges I spoke about. So what is digital sustainability? It's basically leveraging technology to further sustainable development. So technologies like AI, ML, blockchain, these kind of things to further sustainable development, either financial or non-financial. And improving sustainable outcomes, accelerating climate action, etc. So there are a lot of models which have come up within the fintech space, within general technology space to address these concerns. So when I talk of digital sustainability, there are two ways to look at this. First is using the technology itself to address sustainability issues, right? So for example, climate-related action, using IoT sensors, for example, in agriculture. The other point is, and usually not spoken about so much, is how the technology is used. So using carbon-efficient ways in the back end, for example. So green data centers or green computing, for example. Digital technologies can be used for a variety of use cases, which I will talk about shortly. But when we talk of digital sustainability, developing economies are more, these things are more relevant to developing economies as well, because we are hugely vulnerable to climate change, and using such technologies can help very easily, or rather with a lot of prudence to kind of come up with solutions. Fintech has been one of the primary adopters, obviously, of cutting-edge technology, and I think the biggest advantage of fintech is financial inclusion. And as all of you may agree, that is something which is like on top of the list when we talk about advantages of applying digital technologies. Analyzing alternative data, like utility bills, other things like this, can help in bringing people who are out of the formal financial circle to come into financial technologies. Transparent data mapping and insights. So this is another huge advantage which can be used. Risk identification. Again, when we talk of sustainable finance, risk is a very important component, and many people do not understand how risks can be addressed, how risks can be analyzed in the first place. And using different kinds of technologies, different kind of models, climate risk identification is fast becoming a very important area where people are focusing on. And the other thing is on scale. So obviously, because digitalization is not constrained by geographical borders, enhancing sustainability is possible because of achieving large-scale outcomes, so to say. And finally, reducing footprint. So this is a very obvious, relatable thing, because it's paperless, because branchless, carbon footprint is coming down. Although there is an ongoing debate about fintech sector's impacts of using large-scale energy, e-waste, etc. But again, using renewable energy sources for this, being more transparent, and like I spoke about, using energy-efficient mechanisms, these can be good ways of addressing this. So the evident gaps in sustainable financing can be bridged using fintech, which offers innovative solutions to scale up sustainable finance. Very quickly, I just wanted to touch upon some global developments when we talk of sustainable finance and fintech. So some key markets across the world. So Mauritius, for example, highly vulnerable to climate change, and therefore the government has realized the importance of increasing finance flows to climate adaptation, as well as looking at digitalization. So that nexus has, so they have, set up open labs, fintech innovation labs, these kind of things. India is also recognized as a strong fintech hub, as evidenced by the presence today, thousands and thousands of people. But, so Gift City, for example, their, incentives and established frameworks can, attract more fintechs in the sustainable finance space. As recent as last week, Monetary Authority of Singapore, for example, has kind of revamped its financial strategy, of which climate change and digitalization are very key to the whole, strategy. So you see, across the world, there is action on fintech and sustainable finance, and many cases, many countries are talking of both, in sync. Now, as we saw earlier, the gaps that are observed in sustainable finance flows, can be addressed effectively, offering transparency and robust data measurement, while reducing transactional costs. So just wanted to spend some time on this slide, which talks about the technologies and the products which have been out there in the market, and many more are there. So blockchain, for example, it's like that it's a digital ledger of information. So how can it be used when you contextualize it with sustainable finance products? So that's what I want to try and bring out in this slide. So green utility tokens, for example, when we talk of carbon markets, carbon credits, for example, tokenized carbon credits can be created using blockchain. So this is basically the registries have complete data, complete transparent information, which is easy for buyers of such offsets to track from where the carbon credits have been generated, and complete information around that using blockchain. Another example is tokenized biodiversity offsets. So, there was a case in point in Australia, which is by the Commonwealth Bank of Australia and Biodiversity Solutions Australia, wherein they kind of did an innovative product around ecosystem protection. So the landowners in New South Wales, they were able to, the biodiversity credits which were generated, they could trade that in the blockchain marketplace. And people, or rather the larger developers, larger corporates who wanted to offset their carbon footprint could purchase these biodiversity offsets to kind of negate that. So that was a very innovative product. Next, when we talk of APIs, so as you know, there are bridges between different programs. So mostly, we can relate this to digital payment solutions when we talk of a sustainable finance in context. So for example, there is a fintech called Doconomy, where the carbon, so when you transact on that app, the app throws up what would be your carbon footprint, carbon emissions at transaction level. So they are tracked and they are reported to the user. And also there is a recommendation of how this can be offset. So more from a consumer behavior standpoint. Another example is digital crowdfunding platforms, where a large number of individuals can actually contribute to raising funds. And Raise Now, which is a Swiss fintech, has done this for NGOs, non-profits. Of course, there are a lot of examples on crowdfunding, but this specific fintech kind of stores and tracks data and maps it to the outcomes of the funds which have been raised. Next, on artificial intelligence, so AI and ML, data being the cornerstone of fintech applications, AI, ML, almost every fintech uses it. This, when you contextualize it again to sustainable finance products, lending decision-making, customer support, fraud detection, climate risk detection, these kind of applications are can be related to this. So for example, regulatory technology. So that is something which is fast coming up with all the regulations around sustainable finance, climate, etc., especially in Europe. So green regtech is what the term that is being used. And this enables, so technology enables innovation to kind of, say for example in EU, track the funds or the company's alignment with EU taxonomy. So EU taxonomy basically defines what is green and what is not green. So the activities which is being done by the companies can be tracked to align with the EU taxonomy. So Greenomy is a Belgium-based fintech firm which does something of what I just told, so aligning it with the taxonomy. So soon when India also comes up with these regulations, India has already come up with the BRSR, and the RBI has put out the climate risks paper. So increasingly, banks will need to kind of start using such fintech applications to track their performance in alignment with the regulatory scene which is happening in the country. Green investment solutions are another kind of financial product where investments are done in green sectors with little or no human intervention. Green digital loans is on the other side, where loans are given for green projects. There are many fintech apps which kind of facilitate such loans. For example, there is a fintech called HEMA, which is in the green mortgage space. So tying up with a bank for a loan, for a green mortgage loan, so basically smart buildings and green housing, etc. So the app actually tracks how the performance is on the green side and reports to the bank which gives the loan. And the bank in turn, aligns that with the EU taxonomy or whichever taxonomy it is under. So this particular firm was in EU and therefore EU taxonomy. And finally, IoT or Internet of Things. So this is interconnected devices over the wireless. And again here, insurance is a fast-growing space, insurtech, so to say, and very relevant when we talk of climate risks, insurance, because insurance is a very relevant sector, hard hit by climate impacts across the world. And so Flood Flash, for example, is a fintech which does a parametric insurance product along with Munich Re, which is the reinsurer. So they have created a platform which looks at algorithm-based models to pay out catastrophic flood claims within 48 hours or within 24 hours. I'm not sure of the number. So within a very quick time, as soon as the loss is incurred. So these are some of the products I wanted to touch upon. And the next couple of slides, I just wanted to look at two critical aspects of fintech and sustainability. One was how sustainable finance flows can be scaled using fintech, and the other one is on the climate, how climate impacts can be alleviated using fintech. So first on the sustainable finance flows, how they can be, or rather how fintech is helping in scaling such finance flows. So like I mentioned earlier, data has been one of the biggest challenges when it comes to sustainable finance. And bond issuances, for example, sustainable bond issuances, especially sustainable linked bonds. So what are sustainable linked bonds? Basically, the coupon of the bond is linked to achieving the sustainable outcome. And therefore, it becomes very important for the issuer to measure these sustainable outcomes reliably so that the investor can accordingly can track it. And this is where, from an issuer's perspective, fintech solutions are very helpful in aligning to taxonomies as well as in kind of measuring these impacts which are out there. And from an investor's perspective, because they invest across different companies, comparing the data, comparing how different investments, and when there is a large data pool which is there, digital solutions can help in effectively doing this. Next is around, risk mapping. So again, like I told you, allocating green capital based on, transparent systems, based on proofs, is very important, and fintech is a very important solution to this challenge which is there. Small ticket loans typically have high transaction costs, and therefore banks do not touch it. So looking at fintech solutions is one way of increasing finance flows, which we are seeing it's booming across many markets. So this is like a very straightforward benefit which we are seeing. Again, using blockchain for green capital raising. So basically helping in MRV monitoring, reporting, verification activities, so to say. One other thing, unique thing when it comes to sustainable investments is they are typically long-term, because the nature of sustainable interventions is long-term. So long-term investments needing the investor to stay locked in for a longer period of time, typically making it illiquid. So tokenization, which I spoke about in the previous slide, it's a very unique way of kind of unlocking that liquidity and making it more liquid for investors. So there is a platform called Liquid Token, which works with asset owners and offers liquidity opportunities for such asset owners. Blockchain tokenization is also it's a good way of kind of unlocking capital to smallholders, smallholder farmers, for example, where traditionally it's difficult to raise capital for such small holder farmers, and using blockchain technology, it's easier to raise capital. And finally, technologies like AI, because using it for data collection, data streamlining, etc., for institutions like microfinance institutions, which work on the ground with the bottom of the pyramid, which will help in scaling, finance flows. So just wanted to touch upon a case study in this respect. So Ethic Hub, which is a Spain-based fintech, was one of the pioneers in, decentralized finance, so to say, which is, so basically what this fintech does, it connects farmers from two aspects. One is on the lending aspects, because farmers typically need money to, for their activities, whatever. So from a lending perspective, from a financial perspective, as well as from market linkages perspective. So there are two things which this app does. And so it works typically on a crowd lending, P2P kind of a platform. Connecting, so you can invest either through cryptocurrencies or through a bank account which is linked to the app. And there is also something called smart contracts. So when you lend for a particular intervention, a smart contract is typically generated, which is built into the lines of code. So there is transparency and more reliability for me as an investor when I invest. So basically these kind of examples kind of scale sustainable finance. In this, of course, there are numerous examples. This is just one point in case. But I picked this up because there's a finance angle as well as there's an angle of market linkages, which is very important for someone like a smallholder farmer to reliably sell the produce which is being produced. The next couple of slides, I again want to talk about, climate change, which I spoke about. So climate change is a huge challenge across the world, more so for vulnerable countries, developing countries, because we have, lesser means of coping up with the climate impacts. And climate fintech, therefore, serves as a crucial intermediary, in this respect. So in terms of, so there are, of course, different use cases when we talk of climate impacts, but not just in mobilizing capital for climate interventions, but also change in customer behavior, consumer behavior. So that is fast happening across the world. So right from, carbon offsetting, carbon accounting, climate-related disclosures, raising climate finance. There was an interesting model which I came across by Ant Forest. So basically, they combine gamification with, planting trees, for example. So very unique models, so to say. And one very interesting, what should I say, parallel to sustainable finance is around the insurance space. So there is a fintech called Celsius Pro, which is an insurtech company, which kind of builds index insurance solutions for physical climate risks. So basically the payout is linked to, so the data is sourced from different agencies, and the payout is linked to the data which is provided and not so much on the proof of loss which is happening. So transitioning to a low carbon economy basically requires transparent mapping of risks and opportunities, and fintech can help in achieving this. So there were so many other technologies which I had discussed earlier, many of them aligning with the grave climate impacts which are being faced. So this example, case study which I wanted to highlight is on climate-related fintech, but I mean I'm not sure how it's pronounced. I think it's Pisces. But so this was a blockchain. This is a blockchain-based platform which allows retail investors to participate in climate projects. I mean renewable energy projects. So either solar projects or EV kind of interventions. So usually these kind of investments are more available for institutional investors or high net worth investors. So retail investors like you and me cannot actually go and invest in a solar project, but this fintech has enabled that. So again, it is so as low as 50,000 you can put in, and you can get a fractional share of the project. So each project is housed inside a SPV, a special purpose vehicle, which in turn, it's like an LLP, and that enters into a PPA with a client, for off-taking the renewable energy which is produced. So it is very much like a traditional renewable energy project, but instead of having institutional investors, retail investors can also be a part of it. And there is a fixed monthly return you get into your wallet, which is maintained with the fintech, which can be a return for the investments you make. And the fintech undertakes due diligence, risk management frameworks, etc., because they are kind of responsible for the investors who are putting in the money. And another angle to this is, so they basically let you know how much of carbon offsets are there. So from a personal carbon footprint perspective, you can know how much of offset you are investing in, which the firm actually gives out in the app. So this was a very unique model I wanted to. So this basically addresses the climate mitigation part, in terms of using renewable energy to address climate impact. So finally, my last slide is basically around the opportunities and the way forward. So given the increasing pace, in which sustainability as well as digitalization dialogues are happening across the world, I think it's very important to look at the opportunities which this nexus presents actually. So one key finding which we had found was a lot of it depends on how much the consumer is actually aware. So there are a lot of payment apps, for example, which report to the consumer what is the carbon footprint, for example, because of a purchase. So designing products around individual customer experiences, customer needs is going to be very important. And SDG monitoring, Sustainable Development Goals monitoring it's quite a complex process because it is, it kind of overarches different technologies. So using different technologies to, which can talk to each other and, having partnerships is actually crucial. So sustainability as a concept itself works well when there are a lot of partnerships. And when you throw in technology, there is all the more need to kind of see how can, how can there be a mix and match to get the desired impact. Again, product innovations is very important. We see a huge number of different kinds of fintech products which are available, but especially for the bottom of the pyramid, because that's where the need is most felt. But, instead of, so while there are product innovations, I think cross-sectoral product innovations is very important. So for example, a few years back, a large private sector bank had come up with an app which kind of, works along with a tech company, the government, from a subsidies angle. And there is a wallet-linked application for basically sanitary napkins. So the napkin manufacturer immediately can know what is the demand from the NGO, and the subsidy automatically kicks in. So it's all very transparent and transactional, and there is no subjectivity involved. So such kind of innovations for the bottom of the pyramid. So basically this kind of helped about 20 million rural women and children towards menstrual hygiene. So this was a very unique product which had, it was an Indian bank which came up with this. The other thing was on, calculating internal footprint. So greening internal operations is kind of becoming very important, not only in fintech, across different markets. And with increasing climate change impacts and talk about sustainability, I think looking at greening internal operations of fintechs is very important, because that is like the next step. And finally, businesses have traditionally focused on risks and returns, but having a risk-return impact model within the business model, aligning it within the core business strategy will be the way forward. And towards this, a lot will depend on how policymakers, banks, the government, fintech providers come together and in a multi-stakeholder platform to kind of take it forward. So I'll stop there. Thank you very much for listening patiently, and happy to take any questions.
Thank you, Smitha, for this informative presentation. And I'd like to open for Q&A now. Can we roll the mic in there?
Yeah.
Thanks for that. Was quite informative. Just one question. There was a mention of green digital payments. I want to understand a bit more. Is it more towards like digitizing cash, and therefore obviously the footprint reduces? Is that the green aspect of it, or is that more to green digital payments, or just monitoring, for example, the impact or the offset, right? Is there more to it, or that's the business?
So there are different models. So what I was trying to say is models where, so for example, if you make a payment or if you make a purchase, for example, how much of your what is the carbon footprint of your transaction? So there are apps which track that and report back to the user. And also there are some cases where offsets are suggested, recommendations around what can be done to offset that carbon footprint. So maybe you can, do XYZ kind of thing. So yeah, that's it.
Can you hear me?
Yeah, I can.
So on the SKU level data, right, which is needed to assess and analyze that how much carbon footprint or the contribution is done based on the purchases which are made.
Mm-hmm.
For example, travel or food or any specific purchases made by a specific user. So that app, how can they get the access to the SKU level data?
So I think, I don't know how it's actually working, because I'm also an external party. But from what I understood, I think, so there was one example where the app had tied up with this was, I think, in the UK or the US, I'm not sure, with an offline store. And they facilitated purchase. So it was like a multi-product kind of store. So you can purchase through the app from the store. And the store will give that information to the app, to kind of, so there are different models, but this was one, yeah. Yeah, so I think what you're telling is more complex at different levels, because if it is across different portals, then aggregating that data will be a challenge. Yeah. Yes. It's challenging, yes.
Any other questions?